short. Not anymore. You beautiful boy. Just right.
Hi guys, welcome back to my channel. It's Kennedy here, and today I am with Miss Nicole.
Hello everyone.
She is the founder owner of Tax Hub Solutions. She's the one that helped me start my business because I knew nothing about what I was doing.
You had some ideas.
Did I?
Yeah, you did.
Oh, okay. So today I'm just gonna ask her some questions that you guys might have in this video. You can reference later on when you're starting your business. And like I said in my episode 4, my entrepreneur life episode 4, she's open to virtual calls and Zoom meetings. So if you want to book an appointment, you can. And you know, I'm a new business owner myself, and I needed the help, so I couldn't think of anyone else better than her. So
thank you.
You're welcome. Okay, so the first question is, well, I would say, what do you gain from starting your business?
Good question. A lot of people wonder, what do you gain and what are the benefits of having your own business? And for most of us that go into entrepreneurship is for a sense of life balance, not working so much, you know, in control of your own destiny, things like that. But to be honest with you, it's the opposite. You're working a lot more hours.
For real. Like,
you know, and you're not earning what you think you deserve to earn, especially in the beginning stages. But I wouldn't let that deter anyone from opening their own business, because when opening your own business, you are also gaining confidence. You're understanding what the market is and understanding what your audience want, and understanding, you know, how to make your own money depending on yourself and not depending on an employer and being at risk of being laid off or being without work due to whatever the circumstances. And just recently, the coronavirus. You know, so just being in control of your own finances, your own freedom and security is the #1 benefit. But apart from that, I would say being able to have a sense of working in your passion. That's so often, you know, not the platform. People are just out for the money. But when you are into business, just making sure that you are working within your passion, within an area that you enjoy, you love, you know, because those 10-hour days or 15-hour days doesn't matter, you know, because you're working in your lane. Whereas when you're not, you know, it's pressure. You're miserable. You're unhappy.
I remember when we, like I said in my video, we went to the back and we went through the business structures.
Yes.
I just feel like only 2 out of 4 is really important for this target audience.
Okay.
Which would be sole proprietorship and LLC. So can you break down the difference for them so they can know which, or how to choose which structure they're interested in?
Sure. So the structures are very complex depending on the business entity type. So it can vary. It can be, let's start with sole proprietorship. So sole proprietorship, you know, we look at costs. You know, which one costs the least?
So how much does that typically cost?
That can cost anywhere between, because it's just a trade name. So it can be between $50 to $100.
Okay.
Whereas an LLC can be anywhere between $175 to $300, depending on the state you live in. So sometimes just having that small benefit of being able to say, okay, I just want to register a trade name just so I can get started, and a lot of people just jump the gun and do that, can cost you, and you can literally you know, disrupt everything with what you were trying to start to begin with.
I almost did that, actually.
Yeah. So some of the benefits of having a sole proprietorship, again, is the startup cost. It's very, very minimum. And you know, it's really easy to form. It requires really no paperwork, no you know, costly administrative tasks you have to do on an annual basis. Whereas we're at an LLC, the benefits is, you know, you choose the way you want to be taxed, whether you want to be taxed on your individual tax returns or you want to have your business taxed as its own entity.
That's what I did.
Yes, so you want options. You don't want just one way, which is really the deal breaker. But in addition to that, this is most important, you know, not being liable. You know, if someone were to sue your business and you are an LLC, you are protected under the law. They can't go after your personal assets. Whereas if you're sole proprietorship, they can sue your business, and if they can't get any assets or any income or any rewards from suing your business, they can go after your personal.
So y'all that sell lip gloss and your customers' lips break out,
yeah,
if they want to sue you, you choose LLC, they'll sue your
LLC.
business.
And that way you're not personally liable for your business and any lawsuits thereof.
So, okay, so you recommend LLC?
I definitely recommend LLC. It's better protection, and it just, as you grow your business also, you know, the tax rate is at a lower tax rate than at a sole proprietorship.
What's the lower tax rate? Like, what is that?
So for an example, individuals are taxed at 10, 15, 20, and 37%, whereas in a corporation, you're taxed at a lower tax bracket versus as an individual. I don't have the quote unquote rates in front of me, but you're definitely taxed at a lower taxable rate.
Okay, so I had another question somebody asked. So I don't think they're ready to get their LLC. They want to start a business, but they do want to get the EIN. What is the purpose of an EIN like?
Well, to be honest with you, you shouldn't have an EIN number if you don't already have a business registered. That's number one.
Okay.
Because on the application for the employer identification number, it will ask you, it would state your business is registered.
Oh, IRS, right?
Yes.
I saw that.
So if you falsely put that information in, the IRS has a clause on all of its forms or any type of documents that they supply or you complete. And that states that you can be held liable by law if anything is disclosed to be inaccurate, falsely entered, knowingly that it's false information. So I wouldn't do that. That's number one.
Okay. So like, what's the purpose of an EIN number?
EIN number affords you the ability to be able to open up a bank account for your business. It gives you that tax structure.
That is true.
So, you know, a lot of folks want to go that route. But again, I would refrain from doing that unless you are a registered business.
When I went to the bank, I didn't have my EIN at the time. They told me I cannot come back until I get the EIN.
Let's think about it like this. This is very simple. Your birth certificate for your business is your registration, and your EIN number is your social for your business.
Oh,
So look at it like that.
Okay, because I think I said an EIN is like your business's social, like as if you have a social and you're applying for a job, you can't apply. But I just say for EIN, if you want to look at, you know, vendors and manufacturers and you don't have an EIN, then you can't see it.
Exactly.
Why do they need to collect the information? If I just want to look or buy something, why do you need my EIN number?
Because your EIN number traced back to an individual that's responsible for that entity. So if anything goes wrong, they have some point of reference that they can go back to. Whereas if you don't have an EIN number,
I mean, but what could go, like, let's say I sell lashes, and then this website is saying if you don't have an EIN number, then you cannot purchase from us. But I mean, I don't know what they gain. I mean,
so for an example, when you are a business and you selling business to business, you have to report any income that you receive. And a lot of tracking mechanisms are done by your EIN number. So for an example, think of it as an employee. We get a W-2 from my employer, and we file that on our tax return. How do the IRS know how much income you made from that employer? Because that employer reported that income. So that's a way to make sure that you are not being honest about the income that you make. There's so many ways to tracking it. If you hit the lottery, for example, I just had a client hit the lottery, and I know this is off topic,
For
but it's
real?
relevant. And they came in and they did not bring me that statement that the state sends you when you hit the lottery. So what happened was his taxes was not able to be filed unless he included that income from the lottery authority, because the lottery authority reported it to the IRS under what? Your social.
He get a lot?
No, he didn't lie.
No, I said he get a lot.
No, I mean he got to 15,000, but 15,000 is considerably enough if you're making a certain amount of money.
I didn't
And for him,
know.
he needed to be taxed on that 15,000. In addition to any other income that he would have received that year.
Okay, so is it, what are the chances of a small business having a website with no EIN and no LLC? Like, what are the chances of them getting in trouble, or what could the consequences be?
Whew, that's a good question. Well, in theory, you shouldn't have a website. And again, a website, you don't have to have a business registered. You know, it can just be, you know, they don't require that when you're setting up a website. However, if someone were to acquire your services or products and there's an issue with that, the implications can be, again, a lawsuit. It can be criminal, you know, it can be restitution of some sort. So I would, again, refrain from doing anything unless it's legitimized. Legitimized meaning that you are registered, you know, you're registered with the IRS, and you are doing business in a very legitimate manner.
Could the IRS track your income if you're not registered?
So it just depends on the type of business that you're in. So any
Yeah.
business that collects cash, let's just say that. If you are a high volume or you're collecting cash, the probability of you collecting cash is high, then you don't tend to want to report.
They would have to
Income.
pay? Would they have to pay something?
So when you're collecting just cash, guess what? It's
Yeah.
cash.
Yeah.
It's not traceable.
What about Cash App?
So now that's where it gets a little dicey. So you have Cash App, PayPal,
Apple Pay.
Zelle. You have all these different payment methods that's being used. So now these companies are getting smarter because now they're under mandate by the IRS to report these incomes that's coming from the various businesses.
Okay.
And that's usually on a 1099K. You'll be issued that every year, even Uber drivers, Lyft drivers. That 1099K must be filed on your taxes. And that's showing a disbursement for a monthly income by month of what you brought in. So once they provide that, if you a business and you have anyone that swipes or use any of those payment methods, then that will be tracked by the IRS.
Is it likely? I mean,
It's very likely.
so if somebody's like a licensed cosmetologist, you would recommend, like if they have a business and it's not registered, you would recommend them register the business?
Absolutely. First of all, I don't think you should be conducting business as a licensed stylist without it.
Yeah.
What if you bleach someone's hair and it burns their scalp? You know, again, you always want to lower your risk in business and then make sure that you have as much protection as possible.
So why do you think people are so scared of taxes? Like, is it because they feel like they're gonna have to pay something?
Absolutely. So it's more, the notion is the more I make, the more taxes I pay. And that's not true, because a lot of times if you hire an accountant, they are able to determine what expenses you have and categorize those expenses and making sure you're getting the least amount of tax liability. So meaning, let's just use the most common one, meals and entertainment. If you're my client, I take you out and we have dinner, I can write off 50% of my tab for that day.
Okay, so look, y'all know, if me and my friend Taya want to get crab legs,
Exactly.
and you know, I'm like, girl, you like my necklace? Yeah, I like your necklace. Okay, business.
Exactly.
So let's say my tab is $50. Would I get that back, Or is it like they give me 50% of that back, which is $25?
So what that does is lower your taxable income. So if you made $500 and your meal was $100, they'll give you $50 as a credit to bring down your taxable liability. So now you're being taxed on $450 opposed to $500. Does that make sense?
I'm not really.
So there's a difference between tax credits and tax deductions, and we can talk about that later.
Okay, so now I feel like I need to minimize my spending then.
No, not necessarily, because as long as you can keep good records of how you're spending your money, then you can claim if you are truly losing money because you're putting more into your business the first 3 years anyway.
So I wouldn't have to
that
pay
loss.
anything.
Exactly.
The first 3 years.
Yeah.
Off rip.
Yeah, I mean, as long as you are earning income, revenue, and you are recording your expenses and making sure that your expenses are within business lines that earns you the least taxable rate, then yes, you won't have to pay taxes on that money.
Would it be irresponsible for me to eat out once a week? No. Like using my business card?
Not necessarily, because in business, we're always on the go. We're doing something with marketing, we're going to some type of meeting, we're going to assess some type of property, we're going to look at different products and services, partnerships, linking up with others in business, conferences.
So
those require
write off gas.
Absolutely.
If you pay your phone bill, you write off your phone bill. So
making sure if you're going like from client visits and things like that, then their mileage need to be a mileage log. IRS is very strict on making sure that your mileage log is in order, meaning your starting mileage and your ending mileage, and what was the purpose of that travel. So if you're considering, because a lot of folks do tend to overlook mileage because you get like 55 cents per mile. But trust me, I've had clients that save them probably almost $5,000 on miles alone, depending on the nature of your business.
Yeah.
So it's really important to look into that. And they have different tracking tools that you can also purchase, such as QuickBooks and others that have a mileage feature app that you can download. And then you can just hit start and it'll record everything in Excel and spit it out to your tax accountant literally at the end of the year. So it's really easy.
I need that.
Yeah.
Because I go to school in Mississippi, so Alcorn to Dollar Tree is 45 minutes.
Oh wow.
So
yeah, you're going to get supplies for your business.
Yeah.
Yeah.
Or Walmart or whatever. It's just like, yeah.
And those miles at 55 cents adds up.
Wow.
Now your mileage rate varies from year to year. So just check the IRS website for any mileage changes, because that varies. And then there's also mileage for if you're volunteering. Not sure if you know that, but that's also tax deductible. So those that are out there doing great charitable causes and work, if you volunteer for the church and they tell you to go over to a pantry to pick up food or whatever the case may be, those miles can also be claimed on your taxes.
Only if I'm registered?
That's actually for individuals as well.
I've been volunteering to my freshman year of college and everything is so far.
You can write off those mileage.
How am I gonna find that? Is it too late?
You can also look and see whether or not it'll be beneficial to file an amendment on your taxes. And if that's the case, then you can just amend your taxes and claim those expenses in there. But more times than often, if you're not itemizing your taxes, meaning you are not claiming $12,500, which is the standard deduction, $12,500, then it's not worth it.
Okay.
But if you're claiming more than $12,500, usually like if you own a home,
okay,
you're paying taxes, interest, you donate to church, Goodwill, and all of these good things, healthcare expenses, eyeglasses, all of that, and it equates over $12,500, then you need to be thinking about adding in those mileage.
I had another question. Okay, so let's say I just registered my business, what, like 2 weeks ago? But I've spent so much money, let's just say January 1st. If I keep up with the receipts, I can use that at the end of the year?
Now, yes, you can. I would encourage that. But I would also make sure you're taking photos or some type of record outside of just the receipts, because after a while, the receipts fade. And I've had clients come in that literally maybe even pay cash for certain things for their business, and then they come and they have all these receipts and they're distorted.
What about, well,
so that's why it's important to keep everything segregated, meaning every expense is on your business card. So even in the event of that receipt being faded or distorted or whatever the case may be, you have your bank record.
Yeah, I was about to ask you that.
Yeah, you can go back to your bank statement and be able to see those expenses.
Do we still need a picture?
It's always good to have the actual receipt, because sometimes in audit, they want to justify what the expense was for. If they just see Roof Chris, but what if you went there and you had a kid's meal? And they know that's not business related, because why was your kid there? So depending on the validity and the in-depthness of that auditor, is at their discretion. They can want descriptive receipts for everything.
An auditor is?
If you're being audited by the IRS or the state.
So at the end of the year, when I'm asking you or coming to you with everything that I've spent, would you need a receipt?
Absolutely.
Okay.
Yeah, so I would encourage you to keep your receipts. Again, take photos of those receipts and then just send them or save them. And what I would like to do is just email them to yourself and put the subject line, the purpose of the meeting, or just say business expense and whatever the purpose of that receipt. So that way you can go back and just search on anything that says business expense and everything will pop up, or you can just put it in its specific folder.
That's all I was gonna do. Thank you so much.
No problem.
See, y'all see why I love her, y'all.
Don't cut your journey short.